Every 4 years I get this question. It's an election year. What should I buy? If we get a Democratic president, should I buy this? If the president's going to be a Republican, should I buy that? In this video, whether you're a long-term investor, short-term investor, I'm going to tell you exactly what you need to do, and I'm going to tell you what I do. If you're new here, my name is Maoli Vodi with Financially Present, and these might be some uncertain times because when it comes to these elections, a lot of these candidates are going to tell you so many things that they plan on doing, that they might do, and you don't know if, as far as your investment portfolio, you need to buy or sell or hold or wait. There are a lot of implications depending on who runs the office, or is there? If you listen to a lot of the statements that these candidates make, there is a chance that they probably have sowed some fear in you, or they make you wonder, hey, should I change how I invest? Should I be buying more or selling some of this? Should I wait until after the election is over to make a play? Well, this video is specifically for you. I'm gonna save you some time and help you realize that it doesn't really matter. And I'll tell you why. Before we take a look at that, I want you to make sure, if you're new here, you click the link below to get your 10 crucial steps to being financially present so you can make changes in your financial life as soon as today. To be clear, this video is about the election, the presidential election, and the correlation with your investment portfolio. It's not about what president's going to implement a better tax code or social assistance or women's right to choose, or whether a wall is going to be built or not, or reinforced or not, or relations with other countries and wars that may or may not happen. This is specifically about your portfolio, and all of those other factors are important, but I want to explicitly tell you that this video is about your investment portfolio and whether you're a long-term investor or short-term investor. But as the saying goes, if you stay ready, you don't have to get ready. So when it comes to investing, you need to be regularly invested. You need to make sure you're investing nonstop on a regular basis. And in this video, I have a long-term strategy, a short-term strategy, and if you stay to the end, I'll tell you exactly my personal strategy. So in order to talk about long-term investing during a presidential election, we need to zoom out and focus on what it actually looks like between presidencies. So I want you to take a look at this real quick. You see, the president technically has a very little effect over the economy as a whole. There are many pieces to the economy, and the real change happens in the legislative branch. So we're talking about Congress, and we know that Congress is made up of the House of Representatives and the Senate. So instead of us thinking about Kamala versus Trump, it's really Congress versus Congress, okay? Take a look here and see where the difference lies. We have the average annual S&P 500 performance. And if you break it down, we're gonna look at whether we have a Democratic president or a Republican president, and dig even deeper to see if Congress is controlled by mostly Democrats, mostly Republicans, or if it's a divided Congress, because that is the detail that matters most. When Democrats run both the House and the Senate, but the Republicans control the presidency, the returns are the worst. So that comes in at 4.9%. But on the flip side, the best returns are around 13.7%. And that happens when Republicans have the presidency, but Congress is split between the two parties. That is when the market performs the best, at least in this situation. As for when we have a Democratic president, that's when we actually see the worst outcomes. But that's only if they also control both chambers of Congress, you know, the House of Representatives and the Senate. But it's still positive. It's just lower than when you compare it to the other scenarios. So the presidency is Democratic, but Congress is divided. Now we can actually see returns of 13.6%, pretty much similar to if we were to have a Republican president and a similarly divided Congress. So I guess you can say divided we stand. So when the data shows, without it getting too political, a fully Republican government, that means President, Senate, and House, that performs better than a fully Democratic one. And I get there are bigger factors to consider when voting, but if your only concern is what benefits your stock portfolio the most, Having a divided Congress is the optimal scenario for market performance. And that's just from 1933 to 2022. If you take a look here from 1950 to 2023, the result is the same. So it's even more recent. We're seeing that if Congress is divided under a Democratic president, we have the highest returns of 15.72%. And under a Republican president with a divided Congress, we can still see the highest returns of 12.2% in that scenario. So all of that to say is that it's not about who is at the helm. It is about the supporting cast, just like any good team. So we're basically saying if you were in the S&P 500, regardless of the president, if Congress is divided, you would be perfectly fine. In fact, you would get higher returns than most day traders. You would get higher returns than if Congress looked fully Democratic or fully Republican. So just remember that if you're a long-term investor. Now let's take a look at how things would be if you were a short-term investor, because we can get more specific on who is going to win this election and what we should expect to happen. Okay, so short-term investors, I just want to give you this caveat. It is very common to be right about the sector and wrong about the company. So it's very important for you to make sure you're diversifying even within a particular sector, because I'm not going to give you a particular stock recommendation, because the moment you get that and it's wrong, you're going to come back and attack me, and that's not how it works. Because at the end of the day, you have to understand your portfolio, and if I don't know and understand your portfolio, I can't make a specific stock recommendation for you. I would deem that as inappropriate. So in the short term, if Kamala wins, you can expect to see something similar to this. You would see a lot of what's going on now, because again, we're in a Democratic government right now, where we have a Democratic president with Joe Biden. And you're going to see a focus on companies that have renewable energy like solar. You can expect an uptick or a specific uptick in housing and basic materials. Technology, there's definitely going to be a focus because of semiconductors. And of course, they recently passed the CHIPS Act just a couple years ago. And that is the aim of that is to really reduce the reliance on foreign computer chips and boost the tech industry here in the US. If you're going to zero in on a particular company, that's where you have to commit some more time to additional research. And if that is something that scares you, then I have a video that will explain how you can weed out specific companies, and it has 10 specific questions you need to ask before you buy. Now, on the flip side, if Trump wins the election, let's take a look and see what we can expect, at least in the short term. You can expect the industrial sectors like aerospace and defense to have some level of a surge or some consistency, because in general, Republicans do not like to cut spending on defense. You can also see a surge in energy, specifically oil and gas, and then also with the material sector, especially because he has plans to impose a 10% tax on steel from China and Brazil. So in order to basically bolster those industries here in the US. Oh, and lastly, you can also see a boost in the industrial sector, specifically with a focus on security and protection services. Okay, so we talked about what it looks like in the long term, depending on the president and Congress. We also talked about, depending on what candidate wins in this current election, what we can expect in particular sectors. Now, here's what I'm gonna do. So I've been investing in the stock market since 2008. Started off with individual stock and regularly invested in 401k. So very diverse, S&P 500, target funds, things like that. And what I'm personally gonna do and what's yielded the best result is the same thing. Continue to invest in a diverse manner. So heavily in the large US domestic stocks, and sprinkle it around with some individual stocks, because what I've come to find over the years, some of the individual stocks that I bought did very, very well. And there were some other random ones that I bought individually that didn't do so well. And obviously the ones that I bought that did well overshadow all of the ones that didn't. And it's because the core of the portfolio was based on diversification. And that's how I was able to just mitigate a lot of the risk and still enjoy the upswings of the market. And I did it long term. So I would strongly recommend dollar cost averaging on a regular basis, meaning we are buying a fixed amount or regular amount periodically in the market. So we're buying when it's high, buying when it's low, but still keep some money on the side in case you have an itch you need to scratch. And that's depending on the type of investor you are. So it does take some personal reflection on how you want to be an investor in this market. And as far as what you need to do, you have to be ready, because apparently divided we stand. So if you're asking yourself, it's an election year, what should I buy? I would challenge that thought and say, why are you waiting for an election to determine how you invest? And if that's you, I have just a video for you. So check this out.